if you put $50,000 in the Triple Q today for your retirement and came back in 30 years? Would you be ridiculously rich? Today, we're diving into the Invesco Triple Q ETF, better known as ticker symbol Triple Q, and showing you how an initial $50,000 investment could retire you in comfort and style. Your time is valuable, and I'm not going to keep you here hostage. Here's everything we're going to talk about today. Number one, we'll explore the Triple Q ETF and dive into what it is. Number two, we'll cover why the Triple Q excites me and discuss its performance. Number three, we're going to go over a real-world example and illustrate how $50,000 in Triple Q could make you ridiculously rich. And number four, I'm going to wrap things up by shining a spotlight on the incredible benefits of the Triple Q as a long-term investment. And trust me, you'll want to stick around to the very end because the numbers don't lie. So let's dive into why I'm really into the Invesco Triple Q ETF, and I think it's something you might want to consider for the long haul. What makes the Triple Q stand out is its laser focus on the NASDAQ 100 index, which is like the MVP list of the biggest and most influential non-financial companies on the NASDAQ. We're talking heavyweights like Apple, Google, and Microsoft. It's not just a random assortment of tech names, though it's a curated playlist of innovation leaders that are shaping how we live and work. The tech sector has been the backbone of the market's bull runs, and with our increasing reliance on technology, from cloud computing to e-commerce, betting on tech is like betting on the future. Now, if you're thinking about the practical side of things, Triple Q scores big on performance and liquidity. Historically, this ETF has been a strong performer with solid returns, but it's not just about the numbers, it's about accessibility. The Triple Q offers the kind of liquidity that lets you move in and out of positions with ease, which is great for managing your investments more dynamically. Plus, with a lower expense ratio compared to many actively managed funds, it keeps more money in your pocket and less in expenses. So whether you're a tech savvy or just savvy about where growth is happening, Triple Q offers a compelling way to tap into the top tier of tech without needing to bet on a single horse. It's a smooth blend of innovation and investment, all in one package. But here's where it gets really exciting for investors that desire a portfolio with a proven track record. The top 10 holdings of the Triple Q are companies that are at the forefront of transformative, long-term themes such as augmented reality, cloud computing, big data, mobile payments, streaming services, electric vehicles, and more. We're talking about Microsoft, Apple, Nvidia, Amazon, Meta Platforms, Broadcom, Alphabet, better known as Google, Tesla, and Costco. Diving into the Triple Q, you'll find a sector exposure that's a tech enthusiast dream. With 57% in technology and smatterings across consumer discretionary at 19%, healthcare 7%, and other areas, it's poised for those betting on big tech breakthroughs in the near future. Are you looking for dividends? Then you might want to skip the Triple Q. Its annual dividend yield hovers around a meager 0.54%. It's there, but let's be honest, you're not here for the pocket change. But when we run the numbers today on the financial calculator, we need to be accurate to get a realistic picture of the possibilities. The Triple Q dividend growth has been steadily increasing, and we'll dive into why that matters as soon as we plug those figures into the financial calculator. One key figure we need is the average yearly growth of the dividend payout. Over the last 5 years, it's been 10.75%. Keep this 10.75% in mind because we'll use it in the dividend calculator for the expected annual dividend amount increase percentage per year. I want to make sure these numbers aren't confusing. Our next key figure is the stock appreciation, and since 1985, the NASDAQ 100 has produced an annualized return of 13.65%, and that is not including dividends. And in the last year, the Triple Q is up 37%. Of course, there will be good years and bad years, but I think we're safe to use the 39-year annual average of 13.65% for our expected annual share price appreciation percentage in our calculations. The key figures I'm using in the financial calculator for both the expected annual dividend amount increase percentage and expected annual share price appreciation percentage are the real numbers based on historical performance, and I want you to know where those numbers come from. There are always a few skeptics in the comments doubting the numbers, thinking they are inflated, but that is simply not the case. If you like how I break down these numbers with precision, hit me up in the comments. Your feedback helps shape my future content. Let's zoom out for a moment. I'm about to show you why the Triple Q could be your ticket to becoming obscenely wealthy. Think of it as the snowball effect. Start small, roll it down the investment hill, and watch it balloon over 30 years. That's how fortunes are made, folks. It's all about the long game. Now, let me show you how just $50,000 in the Triple Q could retire you rich. And for those diving deeper into investing, I provide real-time trade alerts in my Patreon. Plus, if you're looking to enhance your investment strategy with my TradingView custom indicators, there's a free trial link in the description below. With that out of the way, let's jump into the financial calculator so you can see the math. All right, let's go ahead and set up our dividend calculator. The first thing we want to do is make sure our distribution frequency for the dividends is quarterly. We do want the drip turned on. Our starting principal is going to be $50,000. And then we want to come on over to the initial annual dividend yield. It's not very much, but it's still something. So that's going to be 0.54%. And then we've got our expected annual dividend amount increase percentage per year. That's going to be 10.75%, and we already covered where those numbers came from. And then we need to put in the expected annual share price appreciation per year, and that's going to be 13.65%. And from there, let's look at the numbers. All right, let's take a look at year one. Our annual dividend, not very much, $270.55. And then our principal increase, $6,825. Our new balance, $57,000 and change. Coming down to year five, we can see our new balance is up all the way to $96,638. Let's drop down to year 10. Wow, starting to climb now. We're up to $186,346. Let's drop down to year 20. We're going to go across here, grown all the way up to $688,000. Year 25, we're at $1.3 million. And now coming down to the big reveal, year 30, $2,530,100. And that's the power of investing in this ETF. Now, I know not everybody's in a position to put $50,000 in the Triple Q and wait 30 years. So let's give something that a lot of people could still do. Let's start with a principal of $10,000, and for an annual contribution, let's say you can afford to do $300 per month, so that would be $3,600 per year. Now we're going to go ahead and hit the calculate button. Everything else remains the same, and let's take a look at our numbers. For year one, our annual dividend, $54.11, coming over to the new balance, $15,010. Scrolling down to year five, it's grown to $43,160. Coming down to year number 10, we're going to come over here and our new balance is now $107,000. Let's drop down to year 20. We're looking at $465,000. Year 25, $915,750, and all the way down here, year 30, $1.7 million. That's $1,777,582, and that's by starting with $10,000 today, adding $3,600 per year. Playing with a financial calculator is almost as fun as it sounds. Sure, we can't predict the next 30 years with certainty, but using Triple Q's historical data gives us a solid glimpse into potential futures. Personally, I'm betting the returns will outpace history. Here's a key insight that strikes a chord with every investor, whether you're well experienced or just beginning. The belief that you need a massive fortune to build your future where your investments support you is just not true. With smart choices like the Triple Q, even a single investment of $50,000 or starting small and consistently growing your Triple Q portfolio could easily make you a multimillionaire. Patience and smart investing can make a huge difference. Let's recap our numbers. The $50,000 investment in the Triple Q turned into $2,530,100. The total return is 4,960%. The average annual return is 13.97%. After 30 years, the annual dividend income is $6,297. Not a huge amount, but dividends were never the goal with the Triple Q. Today's video goes beyond just investing. It's about making wise investment choices with an ETF known for its consistent growth. If you're aiming for a financial game changer, diving deeper into the Triple Q could be the move that helps you build your financial future and sets you up for a great retirement. Don't forget to check out my daily pre-market insights on my YouTube community tab and stay a step ahead in the investment game. Keep it real, and I'll catch you in the next video.